All right. Hello, everyone. So, gold, right? Today we are going to talk about gold. For us Indians, it's not just some shiny metal, it's what your mom keeps locked up in the locker, right? It's what your grandma gets at wedding. It's that feeling of security, correct? But here's something crazy, I'll tell you. You can actually make money from gold prices going up and down without buying a single gram of physical gold. No storage, no making charges, no tension. I know it sounds confusing, but trust me, by the end of this video ends, you will get it. We are going to talk about MCX gold trading and I'll explain it like I am explaining to one of my friend over chai, not like something boring textbook. So let's go. So what exactly is this MCX thing? Okay, the first thing first, what even is gold trading? Imagine this, gold price is 65,000 for 10 gram today, right? You think it will go up to 66,000 next week, so you buy a gold contract today. If you are right and it goes up, you make profit. Simple, correct? But you never actually touch any gold. It's all on paper. Now MCX multi commodity exchange think of it like NSE and BSE, but instead of stock, people trade commodities here. Started in 2003, I guess, based in Mumbai and totally SEBI regulated. So it's legit and safe. MCX has everything. So MCX has, I'm just on another slide, just go through with these pointers so that you can also refer what I'm talking about. So MCX is everything: gold, silver, crude, oil, natural gas, but gold, that's the superstar. Biggest volume, most traders, maximum action. Why would anyone trade gold here instead of just buying jewelry? Bhai, good question, right? Look, you don't need a locker, no making charges, eating into your money. You can buy and sell in minutes, not days. You can start with small money, and here the kicker: you get the leverage, meaning you control big position with small capital. Jewelers use it to protect their businesses, investors use it to make money, and traders, well, we are here for the action. Now, so I'll talk about what is gold trading, right? Different type of golds we have, uh, wherein you will see choose. All right. So MCX has different gold contracts. Think of them like different size of pizzas: small, medium, large, same gold, different quantities, right? So gold, the big daddy is here, the standard one. This 100 gram is one contract right now. One contract is worth around 5 to 6 lakhs. Uh, Scary, sounds scary, I know. Yeah, but you don't pay full amount. You need about 35,000 to 45,000 as margin. This is what the big players trade. Maximum volume, super liquid. And then gold mini, it's a like a sweet spot, you can say. It is just 10 grams, contract value around 65,000 to 70,000, margin needed 3,500 to 4,000 only. Perfect for regular uh, folks like us. Most retail trader love this one. And gold Petal, literally just 1 gram Petal. Contract value is 6 to 7,000, margin around 350 450 rupees. If you are totally new, start here, learn the game without risking much. And this is the last one is gold GUINEA, the traditional one, 8 gram, right? So old school Indian measurement. So contract value around will be around 50,000 to 55,000, margin about 8,000, no, sorry, 3,000 to 35,000. Not as popular, but it is there. So my honest advice, if you're sitting here with 5,000 to 10,000 thinking, can I start? Question mark, right? Can I start? Yes. Start with gold pattern. Practice. Make mistakes with small money. Got 25,000 to 50,000, gold mini is perfect for you. 1 lakh plus. If you have 1 lakh plus, you know what you're doing. Go for the standard gold contract. Don't jump into big contract. Just look cool. just to look cool, right? I have seen people blow up accounts that way. Not worth it. Not worth it, right? And if I quickly talk about the margins, right? So you also have to understand the margins game, right? Here, where it gets interesting, okay? The margin things confuse everyone at first. Let me break it down really simple. What is margin? It's basically a security deposit. Like when you book a hotel room, they block some money on your card, right? Some concept. Let's take an example. If you want to trade 100-gram gold, total value is 7 lakh. 7 lakh is a big money, but you don't need 7 lakh. You just need margin around 40,000. So with 40,000, you're controlling 7 lakh worth of gold. That's leverage, my friend. Sound amazing, right? But here is the catch. The gold price moves in your favor by 100 per 10 gram, you make 1000 rupees, correct? But if goes against you by 100, you lose 1000. Not good. so, so it's like a sword, cuts both ways. This is why people say leverage is dangerous. If you don't know what you are doing, the exchange calculates two types of margin. One is called span margin based on how volatile gold is right now. The other one is exposure margin, extra buffer for safety, total safety. Total you pay equal to both combined. Uh, so it's a complicated, but still you have to understand this. Here's something important: market to market. Every day, the last concept apply daily. The market to market, the type of the margin you can see here. Every day our position is checked. Whether it is in profit, great, money gets added. In loss, money gets deducted. If your margin drops too low, broker will call you by add, add more money, you will close your position. Otherwise, they will close your position, right? Not you. That's the margin call. Scary moment for all of us, trust me. So you have to understand margin concept very well. Now let's talk about the trading hours and expiry. Uh, so Max MCX gold trades from 10 a.m. to 9 a.m. to almost 11:30 or 11:55 p.m. It's like 14 hours market. You can trade even when US markets are open. That's when gold really moves. About expiry, uh, contract expire on last working day of every month. But here's the thing: most traders exist before expiry. If you hold till expiry, physical delivery process starts. Trust me, you don't want to headache as a beginner. Now, what actually moves gold prices, right? Let's understand this. Look, you can't just randomly buy and sell. You need to understand why gold moves. Let me tell you the real factor. The dollar, correct? The international gold is priced in US dollar. We know. We all know. I hope you all know about it. When dollar gets strong, gold usually falls. Dollar weakens, gold goes up. It's like a seesaw, right? So, for example, war tensions, banking crisis, recession fears, people run to gold for safety. It's called a safe haven. When when world is uncertain, gold shine. It is called. I mean, this quote, बड़ी बड़ी बातें हो रही हैं, but yes, it's true, in fact. And other reason is also the interest rate. When RBI and or US Federal Reserve increases rates, gold typically suffers. Why? Because people prefer earning interest rather than holding gold, which gives no interest. Rate cuts, gold party time, right? Inflation is another reason. When prices of everything are rising, gold becomes attractive. It's an inflation hedge. You दादी है ना, बचपन में हमारी दादी बोला करती थी ये गोल्ड, आई मीन सारे लोग गोल्ड सी को लेते थे, प्रेफर करते थे. And then super important for MCX is rupee dollar rate conversion, right? This is something very many people miss. Even if international gold is flat, if rupee weaken against dollar, MCX gold will rise. Keep on your, so you have to keep an eye on this conversion rate. Import duty, at times government changes import duty on golds. MCX price react immediately. India imports hundreds of tons of gold, so That's matter. And then festival seasons, Dhanteras, Akshay Tritiya, wedding seasons, everything. Everyone buying gold, demand goes up, prices feel the pressure. Pro, always check the COMEX gold. So that's the US market. MCX roughly follow COMEX, but with rupees adjustment, right? Okay, now we have covered this real talk about. Before we start, all right, let me give you some honest and no honest advice. Start with small. Seriously, I don't care if you have 10 lakhs sitting in your account. Start with Gold Petal or Gold Mini. Learn the platform, understand how margin works, make some mistakes with small money. Stop loss is not optional. I can't stress this enough. Gold can move fast, really fast, without stop loss. One bad trade can wipe out your money. Always use stop loss. And um, you have to set up some rules for yourself. Right, just because market is open for 14 hours don't just mean doesn't mean you trade all day. Quality over quantity. One good trade is better than 10 mediocre ones, right? 2 to 3% rule: never risk more than 2 to 3% of your capital on one trade. Correct? That sounds conservative, but that's the reality. That's how you survive long term. Open the right account. You need a commodity trading account. It's different from your regular stock account. Zerodha, Upstocks, Angel One, all the major brokers offer it. Just make sure commodity segment is activated, and yeah, you can start. So let's talk about some tax also. I can, if I can cover it in this video. So gold future profits are treated as business income, right? Taxed at your slab rate. Keep record, file properly. Final thought is, look, gold trading is genuinely exciting and there is a good money to be made, but it's not magic. It's not a shortcut to getting rich. You need to learn, practice, stay disciplined, manage risk, start slow, build experience, then scale up, right? Honestly, paper trade first if you can. Only paper trade if you can, to start with that gold petal contract. Get comfortable with the mechanics before going big. And I hope this video will help you to understand the concept around MCX Gold. Please hit like and subscribe. I'll make contact on commodities and trading regularly. If you have any questions, drop me in comments. I'll actually read and reply to all of them. And remember, patience in gold trading is well golden. So happy trading and don't do anything stupid. I'm really sorry about this, but yeah, that's the fact. Bye bye. Take care. Thank you.